For Morningstar, I'm Karen Wallace. Investors paid lower fund expenses in 2016, according to a report Morningstar has recently released. Here to discuss what's driving that trend, as well as some notable fee cuts, is Russ Kinnel. He's Director of Manager Research at Morningstar. Russ, thanks for being here.
Happy to be here.
So, Russ, lower fees are certainly benefiting investors. What's driving this trend?
Yeah, it's really money going into passive funds for the most part. So we have passive funds cutting fees and money's flowing in that direction, both ETFs and open ends. So overall, we saw the average investor's bill went from 61 basis points to 57 basis points. That's asset weighted, but it really shows just how dramatic that trend is. 4 basis points, it doesn't sound like a lot, but it's pretty rare to see that big a cut, and I think it really shows that people are really cost aware, and of course the move into passives and ETFs has really gained steam.
And speaking of passive funds, Schwab Fundamental US Company Index cut its fees by a significant amount. Can you discuss that a little bit?
Sure. They cut their open-end version of their fund fees from 35 basis points to 25 basis points, a significant cut. This is a fundamental fund, which means they, instead of having market cap weighting, they weight based on sales, cash flow, and a number of other factors. So it gets you a little different exposure than a market cap weighted fund. There's a clear value tilt, and now at 25 basis points, it's definitely more appealing. We rate it bronze.
There are also some notable active funds that cut their fees. Could you discuss those a little bit?
Sure. FMI Common Stock is a fund we've liked for a long time. We rate it gold. It's a small mid-cap fund with sort of a value and quality mix of criteria, but they cut their fees from 112 to 104, so an even better expense ratio. Really good fund run out of Wisconsin. Another one that's probably a little less well-known is Ariel International. We rate that bronze. They cut fees from 1.25% to about 1.13%. On the individual investor, their institutional share class is cheaper. But we've been warming up to the fund. Rupal Bansali runs it in sort of a defensive-focused portfolio, but if you look at the names, they're really some of them are really off the beaten track, and so she's got a good track record here. But also before this, she ran a mainstay fund with good results. So this is a promising fund that really is below most investors' radar right now. The final one is Allianz GI Technology. This is a fund we've liked for a long time, but we always complain about the fees because it's always kind of high cost. Finally, they're starting to do something about it. They've cut it from 131 to 117. Still not super cheap, but it's at least more reasonable. You've got very experienced managers and a good track record. Finally, fees are starting to pull their weight.
So these are funds that we like a lot, and now we like them even better with their lower fees.
Yeah, for sure. It's nice to see these active funds keeping pace with the times. A lot of active funds have been slow to cut fees, but some of the better ones are responding to the clear trend and the competition from passive and cutting fees, and we love to see that.
Okay, great. Well, thanks so much for being here to discuss this.
You're welcome.
For Morningstar, I'm Karen Wallace. Thanks for watching.